Private lending for long-term rental loans was extremely tough in the second half of 2022, and it's not only because the interest rates have increased. In this video, I'll explain what's happening in the private lending industry as it pertains to DSCR long-term rental loans, what the current interest rates are, and I'll also provide a few tips for real estate investors that are looking to obtain long-term financing for residential rental properties in 2023. I'm Rocky Butani, founder of PrivateLenderLink.com, where investors and brokers can easily find direct private lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. This video was produced in December 2022. Much of the information I'll share was gathered from talking to many of our lender clients and attending a few industry conferences over the past 6 weeks. Obviously, the increased interest rates are making it tough to close loans, but aside from the higher rates, the lack of liquidity is the primary reason that it's tough to get DSCR rental loans funded. And what I mean by lack of liquidity is the large institutional investors that used to buy pools of DSCR loans are currently out of the market. Almost all DSCR loans are sold to the institutional secondary market, then pooled in bulk and securitized as a bond. At this time, no public securitization deals are closing. The increased federal funds rate caused bond investors to focus on other investments that offer a similar yield, and many of those investments are rated securities. As of this time, the large rating agencies have not yet rated private lending securitizations, so we have a limited number of bond investors to recapitalize the private lending industry. A few insurance companies have an appetite for long-term rental loans, but they only buy from the largest private lending companies. And some institutional capital providers are still buying DSCR loans on a selective basis and holding the loans on their balance sheet until the securitization market comes back. Balance sheets are limited, so we're not talking about a huge volume of loans here. The lack of liquidity in capital markets means that lenders have to tighten up their guidelines and only originate loans with the lowest risk. They are not considering any borrowers with average credit. The minimum FICO score for most lenders is 700. And for cash-out refinances, some lenders are requiring their borrowers to have cash reserves. So the idea here is that they don't want to lend to real estate investors that have no liquidity and want to use the equity from the rental property to pay for living expenses. Most lenders are maxing out at 75% loan-to-value for DSCR rental loans. In the past, the maximum was 80%. Some lenders are rejecting DSCR loans for rental properties in markets that are experiencing large price declines, including Boise, Austin, Phoenix, and others. Many lenders are avoiding short-term rental properties located in secondary and tertiary markets, unless the investor operates multiple STR properties. Investors that are new to short-term rentals may have a tough time getting financing, and/or they'll pay a much higher interest rate. Interest rates for DSCR rental loans are currently ranging from 7.5 to 9.25% for most lenders. The good news is most lenders don't expect DSCR interest rates to increase much in the near future, even if the Federal Reserve increases rates during the first quarter of 2023. The bad news is most lenders don't expect rates for DSCR rental loans to come down anytime soon. But one way to reduce the interest rate is to buy it down by paying a higher origination fee. For example, if you get a quote for 7.5% plus 2 points, the lender may reduce the interest rate by 1/4 or 0.5% if you were to pay 3 points in origination fees. And you may want to consider a shorter loan term. In addition to 30-year terms, many lenders now offer a 3-year or 5-year loan term, but the prepayment penalty is always a concern with long-term rental loans. If you're anticipating that the interest rates for DSCR loans will come down in the next 2 years, and you can eventually refinance with a lower rate, you may be thinking of getting a short-term bridge loan for 2 to 3 years instead of a long-term loan with a big prepayment penalty. One solution to this dilemma is to buy down the prepayment penalty with a higher interest rate. For example, if you receive a quote for 7.5% with a 3-year prepayment penalty, you could possibly increase the rate to 8% in exchange for a 2-year prepay. The higher rate for the long-term loan will most likely be 1 to 3% lower than the interest rate for a short-term bridge loan. Interest rates and guidelines for DSCR loans are still changing quite frequently these days, but many lenders are still actively closing deals. If you're seeking a DSCR long-term rental loan, use our website PrivateLenderLink.com as a resource. We have a select group of direct lenders listed on the site. All of them have a very detailed profile that shows their lending guidelines. You can contact each lender directly, or if you'd like some recommendations, click the Create a Loan Request button. Provide some information about your deal for us to review, and we'll invite a few select lenders to look at it. If you found the content in this video to be useful, please click the like button and be sure to check out our other videos about private mortgage lending. Thank you for watching, and see you in the next video.